Hello, I'm your host Prasanna Rajagopal. I'm back with a weekly update on the performance of the Vanguard ETFs. This update is for the first week of October 2023 with 5 trading days. Let's get started. Out of the 23 ETFs tracked, just 5 gained during the week. The gains were led by the Vanguard Information Technology ETF with a 2.2% gain, while the Energy Index ETF lost a staggering 5% over the course of the week. The Information Technology ETF and the Vanguard S&P 500 Index ETF have benefited from the gains or the strength in the Magnificent 7 stocks: Apple, Alphabet, Amazon, Meta, Microsoft, Nvidia, and Tesla. Although Nasdaq and the S&P 500 index have had double-digit gains, those gains are on the backs of just these 7 stocks. Most of the market is either flat or down for the year. You can see that in the indexes that I cover regularly. Besides the Energy Index ETF performing poorly, the Real Estate ETF and the Utility ETF continue their bad run over the past year, with increasing treasury rates putting pressure on those dividend-yielding sectors such as real estate, utilities, and consumer staples. In fact, the consumer staples ETF was the second worst performer during the week, having lost 3.3%. When you compare the current price of these ETFs to the 200-day moving average, you see how weak this market is. Just 6 of the 23 ETFs are trading above the 200-day moving average. Some of them are just barely above that 200-day moving average. For example, Financials ETF is trading about 0.7% above its 200-day moving average, and the S&P 500 index, for all its gains of nearly 12% year to date, is trading just 0.8% above its 200-day moving average. This tells you that most sectors of the economy are very weak currently. The utility sector ETF is down double-digit compared to its 200-day moving average. The consumer staples have also suffered. Real estate sector continues to suffer and is down more than 6% compared to its 200-day moving average price. When you compare the current price to the 50-day moving average, things look even worse. Just one ETF out of the 23 I track is trading above the 50-day moving average and barely trading above it. And that ETF is the communications sector ETF. This again is another proof point that this market is extremely weak and it is prone to more downside if there is poor economic news or a shock of any sort. Although crude oil gained 30% between June and September, the first week of October was not kind to crude oil prices. Prices for crude oil dropped 6% in the first week alone. One wild card is the terror attack on Israel by Hamas over the weekend. If that escalates into a full-blown war in the Middle East, oil could go much higher. I'm looking for good bargains in dividend-paying stocks. So I want to highlight the performance of the companies in the Vanguard Dividend Appreciation Index ETF. The ticker symbol is VIG. The worst performer on this list is Albemarle Corporation. Some of the companies that stick out in terms of dividend paying are Next Era Energy, International Flavors and Fragrances, which is a consumer staples company; Tyson Foods, another consumer staples company; Fifth Third Bank, a regional bank; PNC Bank, another regional bank; pharmaceutical giant Bristol Myers. Northrop Grumman, a large defense contractor, is down for the year and may also be worth looking at for dividend income in the future. I highlight the dividend yield of 3 companies from the Dividend Appreciation Index ETF. The first one is J.M. Smucker, symbol SJM. Currently, it yields 3.6%. It has grown its dividend by over 5% annually over the past 5 years and has a low beta. That means it is less volatile than the market. All three companies featured here have a very low beta, so they can act as a buffer against the market's volatility. NextEra Energy offers a 3.7% dividend yield and has grown its dividend by 11% annually over the past 5 years. Bristol Myers has grown its dividend by 7.3% over the past 5 years and currently offers a 4% yield. These look like enticing dividend income stocks. I own JM Smuckers and Bristol Myers. NextEra is a stock I'm looking at maybe adding to my long-term dividend income portfolio. Thank you so much for listening. I'm grateful for your time. If you wish to follow me on LinkedIn, please do so. I also write on the Seeking Alpha platform, so you can check out my articles there too. Thank you.